Valentijn Van Nieuwenhuijzen is part of a team that oversees some 25 billion euros. He's head of strategy at ING Investment Management. Joins me in the studio now. Valentijn, what do investors want to see from this meeting?
Well, I think indeed the suggestion that we should be focusing on the ability of the EFSF to become larger by levering up, possibly by becoming a bank entity which could borrow from the ECB, is really an insightful idea. It's not necessarily coming out of this meeting as a final thing, but if the developments in that direction, I think that would be seen as a positive.
And the fact that Tim Geithner is present at that meeting, how much does that boost the idea of a European version of a US-style loan facility, so leveraging the EFSF with sort of partial government guarantees?
Well, I think the idea was out there already. There's actually been floated by some Europeans themselves, but I think the fact that he is there is indeed pushing this idea a bit stronger. And already I think it's clear that he will be supportive of such an idea. So that's why we're seeing some anticipation, probably in markets as well today, of somewhat more constructive outcome.
All right. So central bankers have been, they've come together in this coordinated move to help Europe's financial institutions, but nevertheless, now they are putting the pressure on politicians. You guys need to get on with ratifying the agreement on the EFSF, and right now you have only 5 of the euro area's 17 governments that have actually ratified this agreement. Are they going to pick up the pace after this meeting in Poland?
Well, let's hope. If you look at who have ratified, you can sort of understand why they did it, because the majority of them is clearly in need of additional support. I think indeed what is important from the central bank movement is that you see that policymakers are still willing to coordinate and are still able to surprise markets, and that is maybe what's now sort of driving positive sentiment. However, we are still quite skeptical on the politics of this. So, yes, we will change our mind if we have the levered up EFSF, but the politics are changed.
Are the markets paying too much attention then to these little developments here? It's not a little development, it's a coordinated policy move, but then many critics are saying it's essentially a liquidity solution to a problem of insolvency and therefore only temporary.
Well, I think, markets are a bit sort of in a manic depression state, right? They can be very negative and then a little information bit comes out and all of a sudden they jump up, and it doesn't give you a lot of comfort. However, there is an essential thing here, is that it's not only a liquidity issue. For some of these countries, liquidity issues can translate into solvency issues. And if we can address that and have some kind of a lender of last resort for solvent governments in the Euroland, that would be a more structural change, which is positive for Europe.
Are you talking about the ESM?
Well, the ESM in the end, but before we're there, we first need to come to 2013. And so we need either the ECB to continue to support these markets with liquidity provision, or we need more from the EFSF.
Interesting to see what you're doing in terms of the management of your portfolio in this environment. As you say, things are still very uncertain. And actually, just want to take a look at that. If we just pull that up. Now, you've described yourself, Valentijn, as being happily defensive. You're staying there for the time being. Yeah. And if we have a look at just how you're viewing asset class at the moment, you're underweight on commodities, real estate and equities. Yeah. In fixed income, you say that you're strong underweight on European investment grade debt and you're overweight on Japanese and emerging market equities. And so you've got a lot of protective measures that you're taking in terms of your investments. But just tell me more about the opportunities you see for making money in this environment.
Well, I think indeed we continue to have a defensive stance. I think one of the only things that at the margin is changing is we're not becoming more negative anymore. For a long time we were long treasuries, for example, because we thought all these risks were supportive of treasury markets. We have now last week neutralized that because we think that the risks for new bits of information being gradually a bit more positive over the next couple of weeks, those risks are rising. So the marginal move might be to be a bit more constructive, but for the time being, I think the main thing is really capital preservation and be cautious. Don't lose too much. That's the main thing.
Don't lose too much. But if you are taking the long-term view, there are also, you're not enthusiastic about equities right now. Nevertheless, you do have a lot of strong blue chip companies yielding good dividends. So.
Well, absolutely. That's a matter of timing there. If you look at valuation metrics, equities, they offer a lot of opportunities. In credit space, there's probably even more opportunities. Some of these markets are pricing in more than just a recession. So absolutely, if you're willing to expand your investment horizon, there are big opportunities out there. We are just considering where at this point in time we already want to move. We think we need a bit more confirmation before we can play these long-term stories.
But of course, once there is enough, once we get enough confidence, possibly more decisiveness on the economic side, if you like, and that translates very quickly to these markets. We see they react to every little thing, and if one was to see a bit of a rebound, well, it would be too late to capitalize on it then.
Of course, well, you know, that's sort of the willingness we have to lose the first move. We're happy to miss that, but we want to be in there if it's a more permanent move. And for that, we need other behavior by fiscal policymakers, probably.
Caution, the name of the game for you.
Yeah, for
Thanks
now.
very much, Valentijn Nemazee, Head of Strategy at ING Investment Management. Good to talk to you.